Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Thursday, and I just want to make sure YouTube is YouTubing. It looks like it is, so that's encouraging. So welcome back to the Frivolity. It is I think we're the 9th of January. Yes, we are, 9th of January. Coming into the end of the first 2 weeks of the quarter, and really this is kind of a funny one because it was really a week and 2 days. So we'll keep an eye on how this first 2 week study plays out. My hunch is that we probably, I just want to make sure YouTube's working. So we'll keep, it is, that's good. Okay, so we also have January leaps expiring on the 17th. So a lot of moving parts around here. Of course, supposed to be big China trade deals formalized somewhere around this week. I'm not exactly sure when. But also, too, I noticed that, oh boy, there's a big catalyst. The vote is officially going to be passed that Brexit actually happens on the 31st of January. So getting the feeling, especially when we watch our January barometer report, this was the first day. And so we sort of took that. Now we're seeing the first week. You can see a lot of similarities between the first day and the first week. So I'm kind of thinking, like I did this study as of about here so far. I can redraw this now. We've got a few more data points, but it sure looks like January is actually sort of telling us to look for a bit of a pause to begin with, consolidation, and then rally into the end of the year. So that sort of talk about, Brexit uncertainty, end of January. I actually think that, we also were talking with Julian about options open interest through the baby powder report, which we have every Thursday on the site. I like the idea of them topping the market out through that leaps expiry into the end of the month. Market's very firm, very strong. And then kind of like what we had right out of the gate, the market is strong and then rolls over, and sort of maybe first week or two of February we actually start a bit of a correction period. So it's interesting to watch how this January barometer report's filling itself out. Risk on, risk off. I mean, obviously with all the global tensions right now. Remember, guys, do not make any investment decisions based on geopolitics. It's always, panic, emotional responses. Gold's going to the moon, oil's going to the moon, and then after the dust settles, you go, oh, gee whiz, it looks like maybe it was a trap. And unfortunately, the public often comes in and buys that, panic or euphoria. And then a week later, they go, oh, crap, now look where the position I'm in. So I hate to say it, but I think that's kind of what I saw happen here through this week. Interesting to see the gold's trying to firm up a little bit more since I first put out these reports in the morning. You can see the bonds actually are firming up a little bit here, but wow, this Japanese yen, what a mess. And remember we had sort of talked about that a week or two ago in that I looked at this Japanese yen chart with the gaps on here, and I was like, this looks ugly. And so what do? They break it out violently up to 38.2 fibs. Ray Burchett, first stop target. We can't decide whether this is actually a bull or not until we resolve this 38.2. So nothing more than dead cat bounce. Total screwing with the public. There's that crazy euphoric event on the Middle East stuff. And then following that, boom, back down we go. So believe it or not, actually, I still think the yen has got a little bit further to go here, but I wouldn't be surprised if actually we get an underside check of this original moving average. And I hate to say it, everybody, but this is such a good example of why we can't take trades on moving average breakouts. You have to wait for the W on the other side to actually believe this is real. I got a sneaky suspicion a massive trap was laid there. The gold market, holy moly, up and down like horror's drawers. You remember we had gotten all excited about gold way back here, and, it kind of don't chase. And sure enough, lots of backfilling going on right now here. I guess the thing that bothered me most about the gold is we actually look at the gold stocks themselves, and I put warnings out to this effect that, oh boy, that is a nasty outside downside reversal on the biggest gold stock in the world still. And there's the follow through. Oh boy, boom, 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 boom. Now we are coming into trendline support, so it shouldn't surprise us. We're going to see a bit of support here. This also is a conversation about, do we accept back into value? And if we do here, my hunch is this is going to be some back and forth. You can kind of see the head and shoulders. So off of a test of these lows, believe it or not, actually I could see a rally back up into this area, maybe an underside kiss of that original breakdown level and then resumption. Or we W out here and then start working our way higher, and that's going to paint things like bot setups. Hands off right now. I can understand why the selling is abated a bit here coming into trendline support. We could probably also do fibs, and that's 50% levels, that kind of thing. And then Newmont, the old biggest gold stock in the world, wants to be the newest, wants its title back. Nasty double top, empire top, double top fail, breakdown. We've come back and filled some gaps. We're probably going to see some support against the old breakout highs in this consolidation area, right? You could think of this as a little na-na-na-na-na area. So, and again, sort of top of value kind of conversation. Do we accept back into value? My hunch is we're probably going to kiss here, then rally back up, and then we find out whether this is for real or not. The problem with this chart, of course, is, wow, look at this momentum. That's an absolute train wreck. Now, what usually happens, but of course nothing ever repeats exactly, but what usually should happen is we should get like an underside kiss on this MACD, and it would actually be here where your trade should crystallize. And what I'm thinking here is if this is the top, and we don't know for certain yet, but maybe we get some sort of kind of like reload zone, counter trend rallies back up top. And through Julian's report, baby powder report, all that kind of stuff, we were actually saying, let's keep a close eye on how stocks like Newmont act up in here. And do we get this underside kiss of the MACD and then trend resumption down? So that's kind of what we're thinking right now. And the long and short of it, from a buy side, I can't touch this. And then if you look at gold seasonalities, oh boy, they look horrible right now. So be careful, everybody here. Ironically enough, I wouldn't be surprised if gold actually spends the next sort of 6 months doing something like that. That wouldn't surprise me at all. So, but anyway, long and short of it here, nothing for me to do on the gold. Just interesting commentary about sort of risk on, risk off. And I get the feeling, the gold itself powered to new highs here, but the gold stocks did not, and that was a warning sign that, hey, maybe this gold move is unsustainable. Okay, so sorry, went off on a massive tangent there, but interesting to see risk on, risk off. Like we said, January barometer still working its way out. Stocks actually went to new highs here. Oh boy. Now, interesting disconnect here because you can see the oil is really having a hard time here. We kind of talked about, you buy your unleaded the middle of February, and gee whiz, you can see my little sort of, saucers where I'd like to see the market pivot. In a weird sort of way, I still like that thinking here. So I certainly can't come in on the buy side on either gold or crude oil right now. And if anything, what I really want to do is just let the dust settle a little bit. Considering we're coming up into the end of the month, I still think stocks are going to be strong into month end. But do you see how we're actually starting to W out here on the bonds? So let's keep a close eye on how these bonds act. And, if indeed this is some sort of pivot top in the stock market into the end of January, beginning of February, I do like the idea of some sort of pivot low coming in. End of January, beginning of February for the bond market. So let's see how these things hold these lows. I might just blow out that short position. Heading on over to stocks in particular, I buy W's. I buy W's everywhere. I also love outside upside key reversals. Buy them, buy them, buy them. If I can get the two put together, even better. Hopefully you look at our little stock picks here on the screen, and it should be just really obvious why I like these trades. So hopefully you can see the W's coming in here. Nice big volume breakout on this socket mobile. It's just been sitting here. And then this one just popped up, and interestingly enough, I run a an old investment model taught to me by an old VSC floor broker a million years ago. And this was one of these stock candidates, IBIT. It trades on the venture exchange. So, I mean, obviously, if you're not privy to that market, then you can't do anything here. But, hopefully you look at this chart and you go, yeah, I can understand why that Beamish guy's interested in this thing. I mean, I'm not expecting these kind of moves up here, but, at 20 cents a share, could I get a rally up into 40 here into the spring to establish a free position? Sure. And, I mean, who knows how the day's going to end. But hopefully everybody can see. And this is what really caught my attention because I was watching this and just, okay, we'll keep it on the radar screen. And then out of nowhere today, big outside, upside reversal through resistance, W's. So, FYI, of course, good old Brian's on the buy side there. So, rinse and repeat. Hopefully you can see the logic of what I do here. And here's just another couple stocks. And, oh, by the way, guess what sector IBIT is involved in? And actually it'd be interesting to get your sort of feedback. YouTube audience, I asked site members to look into it. I don't really know the product very well, but maybe you guys on YouTube can do me a favor. I know there's a few hundred people that watch this, but maybe you can do me a favor and just give me your feedback in the comments. What do you think about this IBIT, their product, their model? I'm not going to tell you what they do. If anything, I'd like for you guys to look at it and give me your feedback as to whether you think this thing actually makes any sense in this crypto world. Oh, I just gave away part of this answer. Anyway. And of course, Brian recently has been just going gaga over crypto stocks. So what a surprise. Another crypto stock. Now, speaking about crypto in earnest, I did see a little bit of emotional reaction come into the market there a couple days ago, which really kind of surprised me. I heard people starting to talk about, oh my God, I've missed the boat. I got to go in and market buy, and I have to buy a lot. So, oh my God, I got to go spend like $100,000 here. Do I just go and market buy? And I'm like, holy crap, slow down. We never want to just buy big breakouts unless, of course, you're long from the W's, right? W's are W's are W's. So, when we were up here, I do appreciate that there are a lot of people that are like, man, this is it, we're going to the moon. I might disagree with that. AB equals CDs, we got up into interesting levels here. And I even remember publicly saying that there were site members who were actively hunting short opportunities up here. Our CTO at TRI, he was getting really interested in the short side. It looks like he was a little bit early, but I think on balance he was thinking the right way. We just have to let these AB equals CDs hit themselves. So on that event, and then, I always ask the site members, who do you think, after these AB equals CD objectives are hit, who do you think is buying up here? It's clearly not the pros, right? So, and of course, public comes in, like I said, just an insane amount of FOMO talk there. I like the idea. I mean, if you want to play this W, keep in mind, this is a big formation. So if you want to take that risk, then I actually think you got to be thinking like bigger, higher time frame levels. Which one was it? So that's really what I think this is speaking to, is something along these lines. And I think on balance, this is actually what they call a Wyckoff check, where, the market is a markup and a markdown process. So what that means is, a healthy bull market should look something along these lines. And so this gentleman who lived about 100 years ago, he postulated, and we call them Wyckoff checks, that quite often what ends up happening in bull markets is we break out, and of course the public's coming in and FOMO buying there. Then we have pullbacks, and we check the original last breakout level, and anybody who sort of missed the boat, if this really is a bull, there will be so many buy orders sitting here that when the market comes down into that, all those buy orders turn it back up. So actually right now we are in the process of finding out whether this thing really is a bull or not. I don't know, I mean, it's a trader's life, everybody. Understand, there's nothing guaranteed about any of this. It's just simply a game of statistics. 60 to 70% of the time I have found in my 30 years playing this game that if you buy W's, you will see 50% moves of previous ranges. This is our with momentum divergences and things like indicators flashing oversold. But 60 to 70% is not 100%, and it's a trader's life. So, the irony of it all is, you can see we're coming up against a fast moving average here off the daily charts. This happens to be BibMax. I wouldn't have a problem if somebody said, look, this is the Wyckoff check. We are checking the breakout. I'm going to go buy, and I'm going to risk against the bottom end of the range. And, I think it's a good idea to generally just use 50% levels as profit objectives because, that way you're conservative. You're not being perceived as being overly aggressive. So that would really actually put the chart there. 1.8, it's doable. That's sort of why we kind of justified shooting for 1.8 there to get that fatter profit objective of like 2.36. I'll be honest with you, I've seen this happen before where if you do extend the profit objective levels, sometimes these trades just have a lower probability of working. And one thing I don't like about Bitcoin, and the reason why I didn't take this trade, is I can appreciate that we did come down to 61.8. I can appreciate it. It makes sense. But my best trades almost always develop off of 78.6 tags. So, I don't know. Call me skeptical. Call me on the fence. I don't really have a juicy, like, oh my God, this is a beautiful setup. It's there. And I wouldn't fault anybody who took it. And if we did rally up to here, I wouldn't be like, oh my God, that's a shock. It looks very normal, but probability-wise, I'm kind of thinking maybe toss of the coin here. How ironic. Toss of a Bitcoin. Heads I win, tails you lose. Who knows? A guy like me, I would personally prefer to focus in on stories like this. That if indeed these W's are right, oh my goodness, look at all the room to move up here. But that's just the kind of guy I am. I know people, and if anything, this is the one reason why a lot of market technicians and stuff say don't get handcuffed just trading one asset, because sometimes you might find that it just doesn't really produce that many trade setups for you, which are relatively high probability, and everything's all lined up like the stars align. So take it for whatever it's worth. I think over the short term we had AB equals CD's hit. I think we've had this, kind of awkward head and shoulders valid fire. I see a Wyckoff check going on. You can see I've already drawn reload zones of where if this is actually a bull and you wanted to try and take a stab, I like the idea of trying to sneak in 74, 71 here off of Coinbase. And we're in the process of trying to figure out whether this thing has actually bottomed yet. That would be my interpretation of Bitcoin price action right now. Sort of finishing this off, are there other coins that are putting in these bottoms? Same thing on Ethereum, and I think Ethereum right now is going through a Wyckoff check right now. Is demand at this level overwhelming supply? And right now, I think the jury's out. It's a trader's life. You just don't know what's going to happen. If you bought this W, which I think is perfectly realistic, which I did, I'm playing this through an options trade over on Deribit, but I don't know what's going to happen. But the trade's on. It's a trader's life. And of course, if we break down through these lows, the good part about buying options is that it's just the capital that you put down. So it's not like you have a big margin call, or you're going to lose your house, or mass liquidation, wrecked. All it is just whatever capital you put into the calls. If it goes to zero, it goes to zero. So that's the one reason why I do like trading the call options in this TRISOF is really, I don't have a heck of a lot of stress here. I bought the calls. It was, I think less than 2-3% of our stake on the calls. And I'm just going to let the trade work. Let's see what happens. Interestingly enough, based off of this entire range, if you're going to come in and buy the 78.6, then ironically enough, actually you should risk down to a break of these lows all the way down here. So I don't really have a problem if they F around with this little W down in here. Because really what I'm thinking is this price pattern is getting me in off of this W way over here. So we'll see how this goes. And I've seen a bunch of coins do this. They paint little W's in here, then a little FU move against this W. All the shorter term people, they get all angry and pissed off. But what you don't realize is actually they're trading against this W, and this is like a sucker's play to try and get the kids in on the buy side. Now, like I said, if you traded this W and you said, look at Brian, I'm going to buy this W and just risk to here, and if it breaks here, I'll just walk away. I don't have a problem with that. But with regard to this options trade that I've been touting recently, I bought the calls. It's a very small percentage of my portfolio. I'm happy just to sit in this and see what happens into the spring. Like I said, that's one of the good reasons why I like trading options, is it gives you a lot of flexibility. And probably a really good example of that is we have a funny options trade for our TRISOF club. Again, very small position, but it's coming into January options expiry here, which is next Friday. And it's like, come on, baby. I mean, this is what might happen with Ethereum. And right into June, we get this crazy ass rally. And that's why I love trading these options, because you just never know. And of course, we just don't have that much money at risk here. And we don't have to worry about margin calls or anything. We just, whatever money's working here. So, take it for whatever it's worth. I think there's a cute little setup working here. I think there's a bigger buying range, and I think that there's a TRISOF that's lined up here, and I'm in the trade. And as I've sort of told you guys repeatedly before, I won't be offended if you don't take my trades. It's not that big of a deal to me. I'm telling you what I'm doing with my money. If you'd like to participate, great, you're more than welcome. But what I would really suggest you do is come up with a plan that's very much your own. If you do like this concept of buying against bottom end of ranges and W's and stuff that I continually, repeatedly demonstrate, awesome. If you're like, I only like trend continuation, so I only do bot setups, awesome. Nothing wrong with that as well. All right, interesting. The telephone is ringing here, so actually probably a great day for me to finish this. Have yourselves a great day, everybody. All the best, and bye for now.